SwissBorg is the official partner of my channel where you can buy, sell, hold, and more importantly stake your cryptocurrencies. You can even earn yield on your stablecoins. Sign up with my link and you'll earn up to $100 worth of their native token CHSB just for depositing €50 worth of crypto. SwissBorg. Hello everybody, welcome back. So got my video on again, so I think we're just going to keep it like this. I'm going to try and dress, well, you can call it a studio if you like. Just dress the background a little bit more. I've got this thing going on at the back. It looks a little bit isolated, it looks a little bit sparse, I have to say. It's a work in progress. I am going to be on SwissBorg's YouTube channel tonight with a handful of other people talking about stuff, so feel free to join us there. I'll post a link on my Telegram, so feel free to join that. All the links in the description below. So what's going on with Bitcoin's price? Well, first, we're going to have to turn our attention to the FX market. We've also got CPI and FOMC stuff going on this week, so it's going to be a little crazy, let's just say. However, you know, like I said in the last FOMC and all this lot, I said, look, whatever they do, I think the markets are speaking louder than the geriatrics who... well, I suppose who control the markets, really. This is your Dixie. This was your major support. We had a move from it, but it wasn't particularly convincing. We could still easily have a move from that, but based on what we see on the daily being below all major moving averages here, getting rejection on the 200 and the 10, and being below all of them, basically, even the 7 simple, does make me feel like it looks like to be, well, it's not feelings, I mean, it's basically what it says, wants to continue down. Also the monthly, a big fat monthly candle body closed all the way down to the 10 exponential. December, we're still actually below the 10 exponential, so the next area of major support on a monthly is going to be 101.8 for the Dixie. Let's have a look at the euro to see what the euro wants to do. It's still meandering up to its major area of resistance, which is 106 at the moment, not really showing any major weaknesses or anything like that, still basically in a decent trend on the daily. And the reason we look at the euro is because it's the main component to the Dixie, I would say at this point now. Whatever the euro wants to do, it should give us a guide to what traditional markets and maybe even crypto want to do as well. So here we go with the 4 hourly, just managing to bounce and get above all major moving averages. Again, you know, we're looking for volatility anyway, given the things going on behind the charts, but if we're focused on actually the charts, it still looks reasonably good on the 4 hourly. Not really afraid of this. Probably get a little bit of a rejection around 106 for the euro. But other than that, it still looks okay to me. I don't really see any major warnings. This is the S&P, so just looking at this as a broad overview of traditional markets. Yeah, we got our rejection from the top of the trend line. This is where we got out, but I'm still very much in favour of a bounce here. Not looking for a major destruction of this chart, not quite yet. If we go to the weekly, what we see is a little bit neater. We can see that the 10 exponential and the centre of the Bollinger Band is all currently hanging around just above this horizontal trend line. Basically 3,900, and I think there's a very good chance that we bounce from here as well. Again, I'm not looking for massive, big, bouncy moves. I'm just looking to remain above those areas. It's not like I'm saying that something's going to be really, really bullish. I'm trying to and put the case, which is that we're not looking for extreme weakness anymore. That's basically what I'm trying to put across here. We're not looking for enormous bullish moves, although they could happen. We're just not seeing the same weakness that we've seen for the last, 10, 12 months or so. So with that in mind, let me just check that the mic is still working. Yes, it is still working. And what are you showing me over here? VRA. So this is I suppose this would be a lot better in a bull market, honestly. Every time I turn to my left, I'm like, oh, painful. Never mind. It's good to be reminded. Right, so what we're looking at here then is Bitcoin on the 4 hourly. Not looking particularly good, I have to say. We're back down below 17,000, which is the criteria from yesterday. So anything below 17,000 basically rules out the possibility for any continuation on the short term, which was yesterday and obviously through today. Now, if we get above 17,000, then we have another run at this 200 exponential, which is only 17,275 at the moment. Now, you know the normal rule: the more times you hit a support or the more times you hit a resistance, the more likely it is to break. So we've hit this 2, 4, 5, 6, 7, 8 times we've tagged it. We're still technically, if we take all the noise off, we're still technically in a higher high, higher low structure, ever so slightly. If we start to close below 16,700, the higher high, higher low structure would be finished, basically. So this little bit of an uptrend that we've had on the 4 hourly, it would be done. But you know, there is hope. Now we could wick down to the $16,500 zone, which is our horizontal, from this area that we've been down in since early November. So for the last month, basically, we've been down in this area, and 16,500 is kind of like the medium zone, really. It's probably even backed up on a daily with some. No, it's not. No, it's not actually. No, there's nothing backing it up on the daily. So really, I would say that at this very moment in time, things don't look particularly good for Bitcoin, despite, you know, the Euro and the Dixie and S&P all forming some kind of an alliance to suggest that they can fight back with the bears. You know, they got some armor-plated shielding on at the moment, and they can handle a little bit more punishment from the bears without it being catastrophic. But Bitcoin is a bit dodgy right now. So long story short, it is a matter of traditional markets. Now let's just go to the 1 hourly. So the 1 hourly is having a little bit of a fight back. The momentum seems reasonable. We're going to have to reclaim, to be fair, we're going to have to reclaim these quite quickly. 17,000 again on the 1 hourly. So our 200 exponential is currently sitting at. So 17,000 has to really be reclaimed, I would say, today, or at best later on tonight, early hours of tomorrow morning, to have any kind of hope that we do continue up. Now, it kind of feels that simple, to be honest with you. 17,000 is a pivotal area for bullish momentum. If we reclaim to 17,000, I can see that 1 hourly would have enough power to push us above this 200 on the 4 hourly, which should then bring us up to 18,000 quite easily. But while being below there, and recognize, you know, at the time of making this video, we're only $50 below that zone. So, and we are looking for closures, arguably, on hourlies, 4 hourlies, any kind of closures, but really hourly being the bare minimum. I would like to see closures on the 4 hourly, to be honest with you, above 17,000. Then yeah, we get that move up to 18,000. But again, it's early days on Monday. You know, this is 9:30 GMT. This is not a time to really get stuck into trades when we're basing everything around Forex and traditional markets, US markets. We do have to wait for them to open. They're not going to open until later on today. And so until then, we're probably going to meander around this area until they open. And if they do open the way that I expect them to open, we'll probably get a bit of a bounce on the S&P. We might get a little move down by, what, $30 or so to bring us down to this horizontal, backed up by the 50 exponential, and then we bounce, and that bounce can take us back up to 4,100 thereabouts, the top of the descending triangle. And again, yeah, same deal for Dixie. Continuation down, looks reasonable on the monthly and on the daily. It's only the weekly, which is still hanging just above that 50 exponential, where, you know, that's basically where we expected to get a bounce. But so far, the bounce hasn't taken place. And with the euro looking, you know, reasonably good, we might not be getting this bounce straight away. But recognize, the geriatrics who run the show will be talking this week. There will be economic data coming out with CPI, and then there'll also be a rate hike, no doubt. Probably going for a 75, I reckon. Why wouldn't they? If I was in their shoes, I'd do the same. My job is to deal with inflation. You can deal with it. You know, the markets are okay. They're not as bad as people seem to think they are. There is fear in all markets, obviously, but yeah, this isn't a horrendous bear market, I have to say. It's pretty much a normal bear market. It's not as bad as everybody says. The main thing is to sort out the inflation, so let them do that. If they're going to do 75, let them do 75. It's no big deal. Anything less than that, fine. But 75 is also fine. That is a bigger problem than a temporary bear market. And again, it is just temporary. It's not going to go on forever. And lower prices are welcomed by myself, and they should also be by you. So I'll leave it with you there. If you want to join us on SwissBorg for this fireside AMA chat or whatever it is, yeah, I think that's taking place at 6 o'clock GMT. Anyway, I'll see you there maybe. Otherwise, hope you have a nice day. Take it easy.